Again by Dr. Anton Didenko for the third in our four-part series, and today we're discussing cybersecurity. So Anton's most recent paper, sponsored by the European Central Bank, is the most recent paper on the topic of cybersecurity. It's titled Cybersecurity Regulation in the Financial Sector, Prospects of Legal Harmonisation in the EU and Beyond. The paper looks at international regulatory practices in this area, argues that legal harmonisation is required, and explores the key elements that could and should be harmonised. It's a timely topic to discuss given the recent release of Australia's cybersecurity strategy and the Department of Home Affairs consultations around protecting critical infrastructure and systems of national significance, for which submissions closed in September. In the consultation paper, the department stated it was especially keen to hear from a number of sectors, but banking and finance being listed first, given their fundamental importance to our economy, security, and sovereignty. The consultation paper puts the banking and finance sector, as well as other sectors, on notice that they will likely be included within the purview of an enhanced security framework that builds upon existing requirements under the Security and Critical Infrastructure Act. The department hopes to do this in a way so as not to duplicate regulatory frameworks, with the requirements including a positive security obligation supported by sector-specific requirements, enhanced cybersecurity obligations for those entities that are important to the nation, and government assistance to entities in response to significant cyber attacks on Australian systems. So Anton, I'm quoting straight from your paper when I say, in the modern digital world where there is money, there are cyber attacks. This has never been more true than in the COVID world. And you have some research from IBM that shows that globally, the finance and insurance sector has now been the single most attacked industry for 3 years in a row. But from a purely Australian perspective, we have the notifiable data breach scheme, for which the report to 30 June 2020 released by the Office of the Australian Information Commissioner every 6 months. This report shows that of the 518 breaches notified under the notifiable data breach scheme for this 6-month period, the finance sector is the second highest after the health sector, suffering and having to notify about data breaches. Third, fourth, and fifth are the education sector, the insurance sector, and the legal, accounting and management services sector, respectively. Malicious or criminal attacks remain the leading cause of data breaches, accounting for 61% of all notifications, and data breaches resulting from human error account for 34% of all breaches. Contact information remains the most common type of personal information involved in a data breach. So with an increasing number of attacks and ways to be attacked, I've certainly never felt more cyber insecure, personally and professionally. But can you tell me, Anton, how will cybersecurity regulation achieve the outcome of helping me, as a consumer of financial services, to feel more cyber secure? And why should we focus on the financial sector first, rather than a sector neutral approach?
Thank you so much, Joni. That is really $1 million or billion-dollar question. And actually, the newest data, also from IBM, suggests that finance and insurance as a sector has now been the single most attacked industry for 4 years in a row, with 19% of all recorded attacks in 2018 and 17% of all attacks in the top 10 attacked industries in 2019. And interestingly, the numbers for 2019 in the most recent IBM report show an interesting development. The number of breached records jumped significantly in 2019, with over 8.5 billion records exposed. That is 3 times greater than in 2018. But the number of incidents, particularly the misconfiguration incidents, has in fact decreased. So this suggests that when a cyber breach occurred, in particular misconfiguration cyber breach, the number of records affected was significantly greater in 2019. And to me, this is a particularly dangerous signal, potentially a wake-up call for concentrated markets like the Australian banking sector, by the way. But back to the question, I think it's a very important one. And of course, the financial sector is not the only one that needs robust cybersecurity. But I think there are very good reasons why finance should be a priority in terms of cybersecurity regulation. And the first is pretty obvious, I think, is that the financial sector is becoming more data intensive as we speak and more data dependent. COVID-19 has facilitated the digital payments in Australia, and it's really a global trend. I did analyze the developments in a number of jurisdictions. For example, in Singapore earlier this year, the Monetary Authority of Singapore, the banking regulator, issued a recommendation to all individuals and businesses to use digital financial services and e-payments and minimize visits to premises of financial institutions to support safe distancing. And also in finance, we're talking about new methods of payment developed to facilitate payments using barcodes, mobile phones, for wearable tech, and so on. And also we're talking about the increasing use of biometric data to identify clients of financial institutions. And there's different progress in this area in different jurisdictions. In India, we've seen the ambitious Aadhaar project. In Russia, they launched the single biometric system operated by the government, but facilitated by commercial banks. So there's a lot more data within the system that needs protection. That's the easiest part of the response. But there are other very good reasons to look at finance, I think. And first of all, the financial system, the financial ecosystem itself is becoming more and more interconnected. So really, just participants are exchanging more, not just collecting more data, exchanging more data. And our regulation actually facilitates this process, this added exchange of data. One example is the rollout of fully digital banks that make use of restricted ADI licenses issued by APRA. Another example is the launch of open banking, and this really multiplies the risks of contagion and creates multiple entry points. So really, in other words, we have reformed our laws and regulations to make finance more data intensive. So it's probably only logical to make sure that the cybersecurity is there, since we seem to be going in that direction already. Another reason is really high cost of cyber attacks. And according to Accenture, the banking sector experienced the highest average annual cost of cybercrime in 2018. I haven't seen the numbers for 2019, but the numbers are there. And I think one of the records in the finance was the breach of the credit bureau Equifax, which had to settle for $650 million in July 2019. That's one of the most recent breaches relating purely to cybersecurity. And one thing to remember, I think, for us all, a wake-up call is that central banks themselves are not immune. And this really brings us to the question of who will watch the watchdogs. There was the famous, well, I should say infamous, attack on the Bangladesh bank in 2016, which had lots of repercussions across the world. But it's not just Bangladesh. Since 2010, we have seen breaches of the US Fed, US Federal Reserve of Cleveland, New York, St. Louis, the breaches of Swedish Riksbank, European Central Bank, and central banks of Russia and Italy as well. So that's just in 10 years, to name a few. And this is a massive issue. And the last point I think to remember here is that we are seeing a lot more data moving from outside the financial sector to other sectors like the cloud, which leads to increased concentration. So on the one hand, we see, so if we're talking about Australia, we already have a really concentrated banking sector. On the other hand, we are not getting rid of this concentration, but there's another reason for added concentration elsewhere, that is in the cloud, and data centralization occurs. And so this also may be a lucrative target for attackers. So if we consider all of these reasons, I think there's a strong argument to be made that greater cybersecurity finance should be a priority, although obviously it's not the only sector where we are talking about the need to protect cybersecurity, of course.
Thank you. It's fascinating. And I mean, you mentioned wearables tech, and that, there are more and more data points that are leading into financial services. And so on this point of wearables tech and Internet of Things, the Australian government has recently released a voluntary code of practice securing the Internet of Things for consumers, which is a set of measures that the Australian government recommends for the Internet of Things industry as the minimum standard for IoT devices. Your research as it relates to the EU shows that a purely voluntary approach does not provide sufficient protection against network and information systems incidents and risks. And so should the Australian government start by at least making the IoT measures a mandatory minimum before they tackle mandatory minimums in the broader financial services?
Oh, this is a really big question about what should come first, but not only what should come first in terms of regulation, but what tools are best. Should it be mandatory provisions or soft law? And the code of practice for IoT that you mentioned is really at its core just a set of principles. It's very short. It's a short document. And it really states that compliance with the principles, I think, is encouraged, but optional. That's very close, I think, to the language of the document. And yes, it's true that the Europeans who adopted the NIS directive, Networks and Information Systems Directive, they concluded that it's not about soft law. They really need hard rules to increase the basic level of cybersecurity. But I think whether soft law is preferable to mandatory rules really depends on the objectives that we have before us. So is the objective really to merely promote good practices in cybersecurity? That's one. Or is it to achieve a certain minimum level of cyber resilience across the financial services sector? And really soft law, like codes of practice, and we seem to like the codes of practice in the financial sector in Australia, at least, it can really help with the former, that's with good practices, but typically the codes aren't directly enforceable. You may recall there was a 2009 case, SAM Management Services against Bank of Western Australia, New South Wales Court of Appeal, where a party tried to enforce the banking code of practice. And the judge very eloquently, I think, called the document itself promotional material and warned banks with a word of caution, saying, well, if you try to include in your contractual documentation your promotional material, well, don't be surprised if you have issues when someone tries to enforce it, because the words promotional material were quite interesting for me. It's not to say that the code of practice for Internet of Things is promotional material. It doesn't look like it's certainly not, but it's just a matter of how far it can go, what it can reach. So one of the biggest issues for me in finance really is the risk of contagion in the relevant sector. So, and based on what I've already said, Australia is already facilitating more and more data exchange in the financial services sector through law, through regulation, and like through mandatory open banking rules. And so I think in this scenario, setting a minimum level of cyber resilience is likely to be more useful. And so, certain mandatory minimum rules, I think, could be really the instrument of choice, giving the direction in which we're moving. Although, soft law is good for other reasons.
I completely agree with you. If we're going to mandate data sharing, then we should also mandate minimum standards of cybersecurity around that. So, you've got a fan here. And so in terms of being able to implement mandatory minimums, you suggest that cyber threats demand an assume breach attitude based on the assumption that not all attacks can be prevented, and more emphasis should be put on identifying and responding to threats rather than attempting to build expensive, impenetrable cyber fortresses. So, how can fintech startups easily and cost efficiently implement an assume breach approach to their cybersecurity?
Joni, you just said easily and cost efficiently, and it's I really wish there was an easy and cheap way of implementing the assume breach principle. And I think in theory we all want quick, cheap, and efficient, something that's quick, cheap, and efficient. But in practice, we usually choose two, right? So it's either quick and cheap, but not very efficient, or vice versa, or sort of quick and expensive, and then efficient, and so on. So you choose two out of three. And I see, well, assume breach really focuses on not less on prevention and more on identifying breaches that have already occurred, reporting them, fixing the vulnerabilities that have been identified, and recovering the relevant affected computer systems. So that's what assume breach is largely about. And I think, of course, there are many standards out there that could be used. ISO 27000, family of protocols, cybersecurity framework by National Institute of Standards and Technology, COBIT 5 framework, and so on. But the issue for startups really is lack of expertise. Those are really complex, long documents focusing on largely on organizational protections. So how to build the cyber fortress and to respond to attacks. And really the paradox I often see in cybersecurity regulation and in a number of jurisdictions is that there are more detailed and complex cyber requirements to the biggest incumbents, like critical information infrastructure or whatever it may be called, the biggest banks, the biggest facilitators of payments, and so on. But really, those who would most benefit from more specific guidance are likely to be smaller firms that actually lack the expertise. So there may be really good reasons why those more detailed rules apply to the bigger firms, but there's also good reason why the smaller firms need additional guidance, I think. And looking at international practices that I analyze in my paper, the law is not always really helpful in this respect. So if you look at cybersecurity rules in a number of jurisdictions, they tend to be abstract and high level. They're rarely specific about this, for example, types of defenses that need to be implemented. And so they're usually principles based. And you know, if you translate legal into English, they basically require cybersecurity to be appropriate to the level of risk. The problem, of course, however, I think is really identifying the level of risk and then figuring out what is appropriate. And that's where you need the expertise. And that's where you need straightforward requirements that are just not there. And of course, there are good reasons why that might not be the case. So one of the easier options for fintechs might be outsourcing cybersecurity, which might be a source of convenience, maybe a source of specialist knowledge. But that is also, to me, a source of vulnerability. Small firms engaging another firm may not have the resources to analyze the code or the programming code for vulnerabilities that they're using or negotiate proper contractual terms with those specialist outsourcing companies and software vendors. So they're more likely to use black box software that they don't understand and they cannot analyze. And so this may lead to information asymmetry between fintechs and those cybersecurity service providers. And so lack of effective control, in a sense, of the operations of those service providers. And I think, in a sense, the cybersecurity strategy that has been adopted in Australia very recently, it doesn't really give an answer, but I think it is looking in the medium to long term to explore whether there is a need for cybersecurity accreditation frameworks. So potentially, I think maybe licensing or some kind of, maybe some other form of accreditation, which might sort of bridge the gap and give some confidence to fintechs using the services of outsourcing companies.
That's right. We've got a question on principles-based drafting coming.
Oh,
So we'll get into it in more detail. But just for a moment, with human error being identified by the OAIC as a significant cause of data breaches, are you finding that there's some hesitation around minimum standards, and it plays back like a chicken and egg problem? So some would argue for an education first approach to reduce the human error, and others would argue for the need for those mandatory minimum standards through, we might see cyber organisations being accredited and providing that service. What's your comment on the human error side of this?
I can certainly agree that there is a lot of discussion about the minimum standards, in particular, if we are talking about potential harmonization across jurisdictions. And certainly human error and misconfiguration is notoriously known as one of the main, if not the main causes of cyber incidents. That's absolutely true. And I can see why in this light it is easy to present cybersecurity as a chicken and egg problem. But I don't really think there is a real conflict between education and minimum standards, or the need to put one before the other. And so I did analyze a number of regulatory responses to cybersecurity in other jurisdictions, and the more sophisticated regimes tend to target both the level of cyber education and increasing the minimum standards in cyber. Just to give some examples, we just mentioned assume breach logic. That's the emphasis on recovery and quick information exchange post cyber incidents. And so I think the relevant measures to address assume breach can be implemented independently from cyber education. Setting up secondary sites with the backup systems and so on, and reporting. The same really applies to multi-factor identification that aims really sometimes to make the systems more human-proof, so to say, or organizational measures to that end, like the appointment of the chief information security officer, for example, within the firm. So all that can be implemented at the minimum level of cybersecurity requirements without necessarily relying on cyber education. But at the same time, of course, if employees in that cyber fortress write their passwords on a sheet of paper or forget the USB sticks in a taxi, real life examples of real breaches, or start tweeting about their cyber exploits, just for everyone to know, and that's how they sometimes get caught, then of course your cyber fortress will quickly fall apart. But I don't want to say that one necessarily comes before the other. So one doesn't work without the other, but one doesn't necessarily come before the other. That's my response, I think.
And they shouldn't. But in a finite resources environment where it takes funding or effort and time for a business to train their staff or to implement systems or to outsource, I think inevitably those decisions do play out. So if you could pick one, which one would you pick?
Sorry, but which one? Standard or the measure?
A mandatory minimum standard.
Yeah, minimum. It's an interesting one. Okay, see, there are many different approaches to minimum standards overseas. So I'm sort of relying on international experience to see what has worked and what hasn't. And really, there hasn't been enough time to make a proper assessment For example, I really like seeing penetration testing frameworks as an element of cyber regulation, and I've seen this implemented in a number of jurisdictions in Singapore, in Hong Kong, in the EU. There's a framework developed by the central bank, but it's such a complex matter. And if we are talking about not just penetration testing, but threat-led or penetration testing, that's testing facilitated by collected intelligence about the target's vulnerabilities that may sometimes be provided by the government. That's very complex. That's not usually at the minimum level. That's usually a more advanced level of protection. And of course, it might be an overkill for smaller firms. But really the starting point in efficient cybersecurity regulation, whatever we choose, requires, I think, reliable statistical data. And to generate sufficient amounts of data, industry-wide, not just for the bigger players, but industry-wide cybersecurity reporting regimes concerning cyber events, I think should be put in place as early as possible, not just for critical information infrastructure and so on. And so I think minimum standards, efficient minimum standards, are likely to include reporting on a wide scale. And there are really interesting design ideas that we have seen overseas. And as for minimum standards, I think really it's about how far we can go as a minimum, how far we are not afraid to go and as a minimum standards. Some jurisdictions have proposed introducing minimum defenses. So not just looking at assumed breach, that is ex post, but looking at what we can do ex ante. For example, multi-factor identification as a baseline, multi-factor authentication with the financial services firms. We've seen this in New York, the New York rules. But overall, I'd say so I would pick industry-wide information sharing as a minimum, but we really need a consultation within the industry and regulators to see how far we can go as a minimum level of cyber that we can implement as a regulatory tool, as a mandatory rule.
Well, and we've touched on it throughout so far, but we don't have any international guidelines to achieve consensus around standards. Without this, we have the patchwork of approaches that we've been touching on. Thank you, Anton, for landscape. Which countries are putting the frameworks in place and the common features between the frameworks?
Yeah, Joni, I had a little trouble with connection, I suppose, but I think the question was, there's a patchwork of approaches, and so what other countries basically are doing, and whether there are any common features between them. And there is a lot. So the short answer would be there's a lot going on. And even a quick summary would take a couple of days, I think. That's because in terms of regulation, most countries do have some kind of set of rules that tackle cybersecurity and finance, but analysis of those rules is complex because the relevant provisions are typically spread across multiple legal instruments. Some of those instruments apply equally to multiple industries, like data protection. So there's not just finance, for example. And some regulations are industry specific. So that's why it's so complex. But in recent years, we have definitely seen a trend towards development of bespoke cybersecurity frameworks. So not just personal data protection frameworks, for example, but rules or regulations that just tackle cybersecurity. And some of the best known examples, I'll just give some more recent developments. So the European Union is working hard. So the European Central Bank was quite interested in the research. They funded my my paper, and the EU has developed a really complex, one of the very few supranational framework involving involving both cross-sector and sector-specific regulations. So there is a general cybersecurity strategy and the NIS directive that I mentioned. It's directive on network security of network and information systems. And there is also sector-specific regulation on cyber. And I think I identified 8 different frameworks in my article. But I won't be trying to cover them. I'll just say that I'll just specifically mention the cyber resilience oversight expectations for the financial market infrastructures developed by the European Central Bank. They were published in December 2018, and it's really complex, multi-stage tool with different levels of cyber resilience expectations for different types of entities within the sector. And in the US, I think the instrument most discussed in the literature is the cybersecurity requirements for financial services companies adopted by the New York State Department for Financial Services. It's adopted in 2017. There are some detailed provisions from minimum data protection standards to organizational measures and cyber reporting. So that's specific for finance. I think one of the more interesting, and also probably the last example I'll give, one of the more recent examples of a complex approach to cybersecurity regulation is Singapore, where there is a Cybersecurity Act adopted in 2018, which is one of the earliest statutes globally to focus entirely on the regulation of cybersecurity. And it, among other things, it establishes a mandatory licensing regime for certain types of cybersecurity services. And one of them is penetration testing that I mentioned previously. So that's a licensable activity. And as for sector-specific tools, that's quite interesting, how this developed over the years, although there hasn't been a lot of time to develop. So first of all, there are 11 notices on technology risk management, so TRM, technology risk management. And those target different types of financial firms, starting with banks and ending with designated payment systems. So they are all in different instruments, but the content is substantially similar. So each notice requires the regulated entity to identify critical IT systems, minimize downtime, and protect customer information from unauthorized access. And if disruption cannot be prevented, then the firm should aim to recover critical systems within a certain amount of time. I think it's 4 hours. But must still notify the regulator within 1 hour of discovery of the relevant incident. So the technology risk management notices, they essentially follow the assume breach principles that we mentioned, largely ex post tackling of the relevant issues. But in 2019, the Mandatory Authority of Singapore, the same regulator, issued a set of bespoke cybersecurity regulations, known this time as notices on cyber hygiene. Again, 11 in total. They came into force very recently, I think in August 2020, and they really target a wide range of financial institutions in Singapore. Pretty much the same list as with the technology risk management notices, but with some exceptions. And really the main difference here from the TRM notices is that the notices on cyber hygiene, the newer ones, focus on cyber incident prevention rather than on recovery. So this is something to notice as a trend. Try to adopt an ex-ante approach.
I found that fascinating, and In terms of, I mean, you've spoken before about the use of ambiguous language like appropriate, but language like that is somewhat necessary in principles-based drafting, where in cybersecurity, as it relates to emerging technologies, we tend to not have fixed or even standard concepts of things, which makes it difficult to define and articulate them clearly. So the Monetary Authority of Singapore, you know, their approach through notices seems quite sensible. And I guess with that background, have you got any recommendations for Australia if we do adopt a principles-based drafting approach in our in what might be our cybersecurity regulation?
I think the first thing we need to remember is that there are very good reasons why cyber regulations tend to be principles based. Really good reasons. You don't want to have sort of to prescribe a certain set of final destination rules for attackers to know what kinds of defenses there are within the sector. And of course, firms have very different size and level of preparedness, so it's fully understandable why principles-based approach seems to be the favored one. And also, many of those regulations focus on organizational matters, so how you build the culture of cybersecurity within a firm, rather than say, hey, you need to have this kind of firewall, or you need to have this kind of antivirus, I need to update those every couple of days, and so on. But really, here is really the biggest issue is that if you basically what you're doing in the regulation is telling everybody to do the right thing and to take appropriate measures, then there's a standard that less sophisticated parties cannot understand and anticipate what's expected from them, especially if you have sanctions for the breach of the standard. That's sort of the biggest issue. And really, I really want to say that we have a really good history, and I like to say that, yes, we do have a history of robust cyber fortresses, at least among our big four banks, and it's logical to assume that the smaller fintechs do not have that kind of preparedness. But let me just pause here for a second, and I don't think that the big four can just rest on their laurels. You just remember the Westpac's 1.3 billion penalty that just was agreed with Austrac. I think that's really useful wake-up call. Cybersecurity was not the issue there. It was reporting, it was AML, CTF. But I think that's precisely the problem. If you look at the report, the ASX report, like 95 pages, I think, there's a very long account of things that went horribly wrong. And there Westpac states that the relevant violations were not, and that's an important bit, were not a consequence of any deliberate intention to contravene the AML CTF Act. And it states that at all times, the board and the senior management sought to ensure that Westpac would comply with its obligations under the Act. So in other words, they did their best at all times. And I don't want to, I have no idea, but I tend to believe, okay, they did their best, but just something didn't work. And that to me is quite a humbling experience, an example for the entire industry. So if the biggest and best resourced market players are unable, despite their best efforts, to adequately configure and oversee reporting systems, as just reporting systems, which apparently have become so complex that they cannot be properly monitored. And I understand how this can work in a big bank. That's really, to me, a clear warning sign for the integration of, before we can integrate something more complex like AI and other black box technologies. So, and here, interestingly, Westpac essentially admits failing to set up and oversee computer systems acting on its own without external intelligent cyber attackers, because it wasn't a cyber issue. It's just reporting. So if we put this into perspective, and you might call me crazy, so I'm fine as an academic. I'll put on my crazy hat, but cyber threats are likely to be a lot more complex to deal with. And so this to me really brings the serious question of, are even the biggest banks that well prepared to face those risks? They may have more resources. True, they have more money, they have more people. They can engage more people on short notice, to fix any breaches and so on that's exposed. But their size and complexity of their internal systems, as we have seen with the Westpac, make maintaining cyber resilience, I think, a big challenge. And personally, to me, so having made this big comment of caution, I think, maybe a crazy comment. I don't know what you make of it, Joni, but and one of the key causes of potential concern for me is open banking and this mandated sharing of data across the sector. So, as I mentioned, we have the law that's already facilitating the sharing of data. It only makes sense to have the law that makes sure that data keeps protected.
I don't think it's crazy, although some of my ideas are often said as radical or crazy. So maybe it's one and the same. What does it say? The great minds think alike. So we'll go with that one. And probably underlying philosophical discussion around the consumer data right and alternate approaches is another 1 hour at least discussion for us. That's not been scheduled yet, audience, so maybe soon. But I can't help but sit back and compare the relatively stronger, at least touted stronger cyber resilience of blockchain-based financial markets infrastructure. The CSIRO Monash University collaboration called Matrict is one of the most recent examples where it's a privacy-preserving, secure financial services technology infrastructure. And just for a small point, if we go to the foundations of what decentralized or self-sovereign identity is, then I can transact with others and with the world and maintain my privacy. It's not necessarily equated with anonymity. I might still need to verify that I am eligible or that I'm an Australian resident, but that's made by way of yes/no questions through zero knowledge proofs. So in that kind of world where I'm self-sovereign about my identity and what yes/no things that I release to the world, I actually am in control of my data. And I'm not relying on a bank to collect that information and share it back with me or third parties. And that's one of the features that I like about self-sovereign identity, decentralized identity, and how blockchain is a technology that can facilitate that. Although perhaps weaker resilience in the sense of smart contract attack vulnerability. And then we have the weaker resilience of existing traditional financial markets infrastructure, or the human processes around that, at least within the financial services sector. And that Westpac example is incredible, even though it relates to a different issue of reporting. But perhaps in traditional world, we've got stronger sense of clear legal and consumer protections. So I think whether fintech startups should have mandatory minimum cybersecurity regulation, or I think if I'm recounting it back correctly, Anton, that we have a minimum level of reporting across a sector to get those minimum standards shared, so we don't have that contagion effect almost, then this is going to be a live discussion to ensure that at least the Australian financial sector as a whole is not compromised as cyber threats increase. And And so, Anton, thank you so much. I've learned a lot from reading your papers. I encourage everybody to read them. And from this discussion today, both Anton and I, we hope that the audience, you're all better equipped to observe and engage in these discussions, and to make a change in your own organisation if you can, in the coming months and years as a result of tuning into this session. So, Anton, thank you again. And to Marina at the Australian Society for Computers and the Law, the Digital Law Association, and the 5th Annual Fintech Awards for supporting and allowing us to bring this discussion to you. Thank you.
Thank you.